is. He's, it's always good, man, because I meet a lot of guys who aren't the way they seem.
Yeah.
Uh, and it just is what it is. It's unfortunate. But Tim is for sure the real deal. And I'm excited to have him come speak at WealthCon and get to film a podcast with him and get to know him on a much deeper level. So it's good, man.
Yeah, he seems like the perfect like avatar for your audience and who you are and what you represent. So that's that was probably a fun one.
Yeah, no, we had a blast. I see we got a lot of people here. Where's everyone from? I see Hawaii. I see Illinois. Where are you
Illinois.
guys from? Right now, I'm in Colorado. Okay, we got Tampa in the house.
You got some East Coast. It's 9:30 joining. That's dedication. I appreciate that.
I know. I just came from the East Coast, so I woke up at 3 a.m. Pacific time today. I've had a long day.
Very
I'm what I'm curious about. So for everybody watching this, what do you guys do professionally? I want to know how many people are, like in real estate, how many are uh, in other industries and careers.
real estate, all the real estate.
Who's not in real estate? Healthcare,
Healthcare.
cool. Pharmaceutical, happily retired. Lloyd, what'd you do before you were retired, man? We
Life
got
insurance.
life insurance. Okay. Santiago knows I don't like realtors. That's not a fair statement, guys. I didn't like being a realtor because I sucked at it and I hate babysitting clients. So I got out of the babysitting industry is really what I got out of.
What I was, who I was with yesterday, Ryan. I was with I didn't know you and him were so close. Todd Kruger yesterday. Out
Todd's a man, dude.
Yeah, good dude. I was out with Todd. I think he's on listening to us tonight. I don't know if I saw his name on here, but Todd's a stud, and he talks highly of you as well. We were out in Dallas actually yesterday together. So
What are you guys doing?
we were helping a business owner out there. We were helping him with he bought a business about 13 months ago and was need a little help. So Todd and I flew out there and met with him and actually Kent Clothier. So we were out there for the day and it was fun. In fact, Kent went to the Rangers game. You're a baseball guy. And we're going to start here. Like, we'll give us one more minute. He said something I thought you might have heard of. I thought was really funny. He said the Rangers won. He's a big Rangers guy. And he said they beat the Rays, who was next? The A team. Rays,
Astros.
Orioles, Astros, Diamondbacks.
Yeah.
RAOD. They won them all on the road.
Wow.
Kent was pumped about that. Kent went to a couple of the games out there. So I know you're a big baseball guy. Were you surprised with the Rangers winning?
I mean, they were good all year. I mean, they were like they weren't as good the second half, but I mean, they're so freaking talented. I mean,
Yeah.
they're just good, and they did it without their best pitcher. They didn't even have DeGrom, so
Mm-hmm.
that's crazy.
All right, well, let's get started. I think we waited long enough. I know we got also usually the next day after we send out this recording, and just as many people listen to it. So first and foremost, I wanted to get started and say thank you for joining us later tonight. This has been a big deal for our Horizon Trust Company clients. A lot of you listen in and have asked me to bring on guests and people who are successful that have been using their retirement account and how they're using it and just some success stories. And you've heard some of those. We've actually had some oil and gas guys come on. We've had real estate guys come on. And today, super excited to have Ryan on. Ryan has done, as most of you know, he's dabbled, I feel like, in lots of different places as far as investing goes, not just in real estate. In fact, I see you talking about different businesses all the time and using your self-directed IRA. I think that's one of the unique things about you is there's very few people. When you and I started talking about self-directing, you're like, oh yeah, I've done that. I've had an account for like, I don't know how many years, 5, 6 years. And there's not very many people that I know that are investing in alternative assets that have had a self-directed IRA. So we started doing this about 4 months ago, where we started bringing on guests to talk about their successes and what's working. One thing that I'm not only excited about to have Ryan on today is to hear kind of his story and introduce you to a lot of you are clients of ours at Horizon Trust. A lot of you also are clients and or friends or followers of Ryan and might not know who I am. We focus our company on helping people unlock their retirement account and use it for kind of whatever they want. And we're going to talk about that a little bit more in detail, but we've been doing it for 14 years. Many of our clients have asked for people like Ryan. And one thing that I'm excited to hear about with Ryan today is he also is going to share with a way that you can either partner or invest with him as well, which we've always had people come on. And I do have to put out a disclosure here before we get started, before Ryan even does an intro, look, we are not at Horizon Trust Company. We're not a fiduciary. I'm not an accountant. I'm not an attorney. I'm going to interview and I'm going to ask questions and get to know what Ryan has done and what he's up to right now and share it with you. But we're never going to get compensated for any decisions you make on where you want to invest your funds. We've got now almost 7,000 investors at Horizon Trust Company. We've got over $1 billion of people that are investing in different assets. We're very proud of that, but we're still a very small boutique firm. It's really important to us that we help educate you and give you the tools you need to start looking at kind of what unlocking your retirement money. So with all that being said, and with that little disclaimer of letting you know that, we are not a fiduciary, we're not going to make decisions on your behalf. That's all the legal stuff. Let's get rid of that, Alex. And let me introduce you, Ryan. Ryan, first, I know probably at least half of the people listening today and also probably tomorrow know who you are, but the other half are clients of ours who, might not know who you are and kind of your story. So would you mind starting kind of just give a little background about Ryan?
Yeah, I'll give you guys the couple-minute version. I've been in real estate now since 2010. Somebody had mentioned I don't like realtors, which isn't true. I started out as a realtor in 2010 and I just sucked at it. So I don't like things that I suck at. And I also didn't realize, I was 21 back then, that it was the toughest time to be a realtor in 2010. Prices were at all-time lows. No one had money. Great time to be an investor in hindsight, but terrible time to be a realtor. And I just got tired of it. So eventually I ended up finding my way back to real estate about 5 years later, but this time in house flipping. And so 2015, I started flipping houses and linking up with, guys like Greg who had money and they started funding hard money loans for me. And that's how I got started. I maxed out all my credit cards and just went for it. And it worked. Fast forward a few years later, I was flipping 100 homes a year. And I think to this point, we've flipped over 600 homes. And, at this point too, we have over 550 rental units under management. Between my fund with multifamily, we've got Airbnb, single families. I've pretty much invested in every asset class you can imagine. So, that's the career on the real estate side. On the other business venture side, done a lot of different things. A lot of people know me on social media. I've gotten over 1 billion views online. That's with a B. And, we've just made a lot of content and, people like it. So, it's gone well. And that's led to lots of opportunities with other businesses. We've got a really big education business for, teaching people real estate investing, specifically flipping and wholesaling and, just buying single family rentals. We, teach people how to do social media and build their personal brands and, generate leads for their business. And, there's just a number of things I've done over the years and I'm just happy to be here.
Well, look, one thing that, there's several things that resonate with me when I hear you speaking or see, I feel like I've seen you on a lot of different stages in different social media platforms, but the common thing that I hear, and I feel like you do a great job of is showing people how to start with very little, because I feel like in today's world, social media is like, yeah, you can buy this hotel or you can do this, this huge $2 million, $10 million deal. And which is true, by the way. But a lot of my, my listeners and a lot of my investors as well, they're like, look, I got $100,000 or I got $50,000 in my IRA or whatever the case is. I just want to do this small little deal or this small little business. And I think one thing that resonates that I see you talking about all the time is how I think I've seen you talk about flipping furniture. right? I mean, is that true, right? Haven't I seen you say something about that? I mean, so and let's just take that example. It might be a silly example, but is that fair? I think you said that, correct?
Yeah, somebody said I'm the top couch flipper of all time. Chris said it. Like I said, I've done a lot of businesses, man. Like I'm open and willing to try anything, like before I started flipping houses, I was just hustling, and I just had this idea one day. I was like, I bet you I could flip couches. Because the way it started was my wife and I got married and we were super young and broke, and I bought all of our furniture on Craigslist, and I spent like $1,000 to furnish the whole thing. And I looked around, and I was like, I bet you I could flip this stuff for like $3,000. And at the time I wasn't making $3,000, I was like, that's pretty good money. And it didn't take me long to do this. So I tested it, and sure enough, it became a business. And, in due time, I was making 10 grand a month, like just flipping couches, and it was crazy. And, that just led to the next business thing. And then, like even other things I've done, like I started a real estate brokerage, and, we had 200 agents. So I know the real estate agent industry pretty well too. And I ended up getting rid of it just because I realized I didn't really like it, or I wasn't passionate about it. And, I started a CPA firm that I actually recently just exited. So I love I'm an entrepreneur at heart. I love real estate. I love entrepreneurship, but really I would say I'm an opportunist. Whatever I think is like the best opportunity at that time, then, I'm going to try and see if I can do it.
Well, look, I bring up the furniture example, and I think someone even said on here, they flip shoes from Ross. I think I saw that. I mean, look, I want to break down kind of this subject as, today I'm particularly wanted to have Ryan come on to talk about some up and coming things he's working on, some opportunities actually to invest with Ryan, which we're going to get to in a minute. But also for those of you that are like, hey, look, this sounds great, but I'm just starting out. How does this work? And so let's just take the furniture or the shoe example. So if you're in this boat of like, hey, look, I want to make money, but not pay taxes on some of these other ideas. Like, let's say you're a school bus driver, or a teacher, or whatever you might be, and that's your full-time job that pays your bills. But you want to start something, flipping the shoes at Ross. You can actually start and open up an LLC and have your IRA, a self-directed account, which is we'll talk about here a little bit more in a second, fund your LLC that flips shoes or that flips furniture. And then that LLC can go and buy and sell shoes or furniture. And in return, all the profits that are made with that simple thing, that $1,000 of furniture that maybe your IRA bought and flipped for $3,000, you don't pay any taxes on if you're using a self-directed IRA. And so I want to share that example, and why it resonates with me is because you are the king of this. You are showing, you're doing it yourself, and you teach people how to do it. And I think the next step for individuals that I try to share is, how would you like to do what Ryan just said, but not pay taxes, or defer paying taxes until later on down the line? And this is probably the reason why we also talk about this is many that are listening probably have an old 401k. In fact, I mean, just as I'm talking here, does anyone here have an old 401k from a previous employer? If you want to say yes,
put a one in the chat if you guys got a 401k right now. Yeah.
I mean, there's over 30 million 401ks that are dormant, meaning 401ks that from people have already left their employer, which means they're sitting there and you are able to unlock and use for anything pretty much that you want. So there's also over 97 million IRAs in the United States. So those two numbers, old dormant 401ks combined with IRAs, there's over 130 million retirement accounts, and that's over $13 trillion. So I share this with you because all those ones that came up, and there's probably lots more, many of you fit in that number. Many of you did not know that you can actually use your old 401k, you or your spouse's old 401k from your previous employer, and actually self-direct it, unlock it, and invest in what you know and understand. And so, Ryan, I talked about this actually for a minute earlier today. What does that mean? What you know and understand? It could be cryptocurrency. It could be real estate. Could be businesses. Someone invested in an ice rink. We already talked about furniture. I think someone said shoes. So I wanted to make sure that for those of you listening that have an old 401k, And I think on purpose, my staff put this here up on the side, and I'm going to go back to this a few times before Ryan kind of talks about some things he's got going on. We have a place where you can set an appointment. So throughout while we're talking here, it says horizontrust.com/Ryan P. Right there. This is our joint podcast that we want to webinar that we wanted to share for those of you individuals that want to learn how to use your retirement account and basically transfer it over so you can access it to invest in what you know and understand. Set an appointment. There's no crazy hard sales pitch. There's no give us your credit card. None of that. We're going to teach you actually how to just move over your account, unlock it, and invest in what you know and understand. It's what we do. We've been doing it for 14 years. And this is one of the main things people are asking me. Now that I know I can unlock it, what do I do next? And so, Ryan, would you share maybe, I mean, you've been doing this for a while. So what are a couple of the things you've done with your self-directed IRA?
Yeah. So I think there's two things here, and you guys are going to start hearing me talk a lot about getting money out of 401ks and going self-directed. I haven't talked about it a lot on social media at all. Just because, at the end of the day, like, I've been busy trying to teach people how to make money, and it's never really crossed my mind that, hey, there's a lot of people who've like got money locked up right now that could be amplifying their business. It could be you could be starting a business, you could be investing with someone, like it's just not doing anything. And so it just dawned on me one day. I was like, man, that's the key. Like a lot of these people are missing is just like, they're like, I don't have any capital. And then I'm like, well, do you have a 401k? And like, yeah, but I can't touch it. And I'm like, well, you actually can, you just don't know how. And, so that's why we're doing this now. And I think a lot of you guys are going to be able to, really have your eyes open to what's possible. But for me, I'd never had a job. So, having a 401k wasn't really in the mix for me. And I never really thought about it. And so I got started in the self-directed IRA game because I wanted to avoid taxes. That was it, right? It wasn't like I was forced to. I was just like, hey, what's the best way to start lowering my taxes? To be honest, I never cared about retirement. I was like, I'm just going to make money. It ain't going to matter to me. But I was just looking at it from a tax savings perspective. And so in like 2017, that was the first year I started making money where I started worrying about taxes. I made about 750 grand that year. I was like, dang, I got to pay a lot of taxes. I've never like made that much money. Like it's cool, but man, that's my first 6-figure bill. And they're like, well, you can start doing these different things. And so I opened up a SEP IRA. And I'm not saying that this is the best one by any means. Like everybody's got different situations. I'm sure Greg will talk about, the difference between pre-tax money and post-tax money. But for me, I was worried about just getting deductions. And so I opened up an IRA where, basically allowed me to take like a 50 grand deduction that year and put it towards the SEP IRA. So I did that. Then I just kept contributing 50 grand towards it the next couple of years because that was around the max. It was like 54,000 something. And, sure enough, I had this nest egg of, 150 something grand. And I was investing in my own flips with it. So, I started using it for my own flips. And then around 2020, we all know COVID hit. And look, I am not a stock expert, but I saw the stock market crash and I was like, you know what? Like, I don't believe in COVID. So I'm like, I'm just going to go buy a bunch of stocks. And so I just bought like Tesla and companies that I actually just was like, this is a good company. There's no way it's worth this. And then sure enough, I basically doubled my stock portfolio in like a quarter. And I was like, I guess I'm a stock investor now. No, that wasn't what happened. I ended up, taking the money from that. And then at that point, I just went back to real estate. And now my SEP IRA just invests in my fund. So, I put it in my multifamily deals and, that's what I've done to this point. And so it just keeps growing and growing. And, it's great with that one. But now as I've gotten older and I've kind of gone down like the other route, I see why now people do post-tax money. So I was using pre-tax money. The beauty of post-tax money is that, the money grows now and you don't pay any tax on it, when you start receiving it. And so if you're expecting it to grow very large, then, post-tax is a great way. So, I've done it a lot of different ways, and I continue to look at just different ways you can, minimize your taxes and grow wealth tax-free. And so I think with your SEP IRA, well, not SEP, but any self-directed, there's a bunch of different ones. I think it's great. And I think if you have a 401k that you got from an employer that you don't control, whether you ever invest it with me or in your own business or anything, it should not be in a 401k. Like, there's literally no reason your money should be in a 401k. You should have control over it. And, self-directed IRAs allow you to do that. So that's my experience.
Yeah. And look, and one thing, a couple of things I'll share is well, for those individuals that want to start with a Roth, which I think is what he's talking about, post-tax dollars, if you foresee that you're going to make some big gains, like the Tesla thing, right? Or anything, right? A new business, if you pay the taxes now and then put your money into a Roth, all of those gains grow tax deferred and come out tax free. That's what's powerful, but you don't get the tax benefit today, which is why at the time when Ryan was funding his account, he was doing a SEP or a traditional. And so when he put those 50 grand in, it was after tax dollars. So he had put up the money, and so therefore he didn't have to pay taxes on that $50,000. So as far as what type of retirement account that is right for you, we'll help you answer that question. I thought I'd share with you as well. As I got into self-directing the other way. I didn't have any money, similar to you, Ryan. And for the first 4 years of my career, I couldn't open up a retirement account. I was having babies quicker than I was building a business probably at that time. And so I was like, just trying to build the business, but I couldn't, I was looking for equity for my deals. I was looking for partners. And so when I learned about self-directing, I was like, light bulb on. There's 100 million. At the time, I didn't know there's that many people. There's people all around me that have retirement accounts that could potentially be my business partner. And so for those of you that are listening to this, they're like, hey, look, this sounds great, but maybe I'm too new. If you know somebody that has a retirement account that can help you syndicate a bigger deal. I mean, Todd's a great example of that. You and I both know Todd. I've done a couple of storage facilities. Todd's listening, I'm sure, today. And, when Todd is going to go fund a storage facility and it's $2 million, but I only have $500,000 or $100,000, me and 10 of my closest friends can all put in $100,000, $200,000 with all of our different IRAs and get that whole $2 million to fund a deal and syndicate a deal. And so if you're in that boat, if you're looking for a partner, if you're looking to syndicate a deal or you have no money, you actually can borrow and or leverage or partner with other people. So when I was in my early 20s and a bank wouldn't lend me money, I found individuals and that's how I actually learned about self-directing before I even owned a IRA company. And so, but that's for some of you that maybe have never, don't have funds for an IRA, but for those of you that do have an IRA, don't be afraid to actually partner up with a couple individuals to go out and do your first deal. You can do a deal with your $10,000 IRA. I think a lot of people think they can't move over their 401k because maybe it's only $15,000. And they're like, you know what can I do with $15,000? A lot. In fact, one thing, Ryan, is people can also open up a 401k, a self-directed 401k. And that's something that is not your traditional marketplace 401k, where you can put up $62,000 into a self-directed 401k. You can borrow from it to pay off expenses up to $50,000, or you can also just invest it in whatever you want. And so we've got investors that are having all kinds of different types of retirement accounts, from Roth to simple to SEP to 401k. Our job, Ryan and I's job, is not to tell you which type of account's right for you. Set an appointment. We'll talk to you. We'll help you get your account set up with us. And from there, you're in control. You get to make decisions of what you're going to invest in. And kind of speaking of that, if it's okay, I want to make sure we have enough time for this, but Ryan, can we talk and transition a little bit? We'll go back to IRAs and self-directing here in a minute, but can we talk about self-directing and in particular, your fund coming up? And to kind of preface this, let me just share with you that many of my investors, or I should say account holders, love the idea of self-directing, but they got full-time jobs. Or they're flipping real estate, very active, and they want that money to go back into their pocket. They're not trying to defer taxes. And investing in a fund, I would say most of our investors with their IRA are passive investors. They're using their IRA in a passive way, meaning they're syndicating and partnering with somebody else. I use my IRA to lend to people. I'm that person that someone was for me 25 years ago. When someone lent me their money and they just gave me I gave them a percentage of the deal. That's what I do now. With my IRA, that's what I prefer doing because I have other things going on, other businesses that I focus on. And so if I'm able to put part of my IRA with somebody or an individual that I trust really well, that's what I prefer doing with my IRA, making it very passive and not paying the taxes. And so, Ryan, I know you've done a lot of deals. I think, didn't you mention before, as far as transitioning into kind of this new fund you've got, I wanted you to introduce kind of to this group. You've borrowed, you've paid on how much, how many loans have you done in your career now?
Yeah, I was actually having the team look that up the other day. In almost 10 years of my real estate investing career, I've paid back over $100 million of loans. So we've borrowed a lot of money over the years, and it's been great for, not only myself, but obviously the investors. And, I want to borrow $1 billion. I mean, that's the goal, right? Just keep borrowing and keep winning, and, everyone wins.
So tell me, so Ryan, you've been doing this for a long time, and you've taken your hits and you've failed and learned from those things, or else you wouldn't be so successful. I know that. And so you've now launched a few new things and businesses, and it's good timing as far as us talking today. I believe you've just launched a fund, correct?
Yeah. So we syndicate on a deal by deal basis for all of our apartment buildings. And right now we've got a deal in Iowa that is really interesting for a few reasons. I'll share my screen real quick. But we've got this deal in Iowa. It's 132 units, just to give an example of the things that you can invest in from a passive perspective. So right now at Pineda Capital, we've got 667 units. So I forgot we added this one already. So it's actually more than the 550 I said earlier. Majority of our deals are in Iowa. We've got one in Georgia as well. And, the cool thing with this deal is we already own it. So this is what we would call a backfill deal where, I've got other types of money. Maybe they're short-term bridge debt. Maybe it's, my own money that I put in short-term that could have came from my own self-directed just to get the deal done. And then we go and backfill it because we want to maybe we're under the gun. We got to buy it right now to get to get it. And then we'll figure out how to fill the rest. And so with this one, we already bought it for a little over 10 million bucks, and we've got $1 million to raise still on the backfill. And, this one, we've got an 18% targeted IRR. So at the end of the day, if everything goes to plan, which it's already exceeding the plan, actually, you should make 18% year over year. Now, the thing you need to know with real estate syndication is that you're not making 18% every year, every quarter. The majority of your return is when the property sells. That's how it works. And so, if you're looking for like, oh, I'm going to get 18% cash flow, there's not many things, period, that do that. Okay. All of your money in most investments is made on the exit. But that being said, it's just a very good deal. It's a beautiful
let me interrupt
property.
real quick, Ryan.
Yeah.
Back on this slide. Yeah. I think the reason why this is it works so well with people with IRAs is they don't need the income. Why? Because most of you that are investing with your IRA, you can't touch it anyway. So if it's back-ended and you're getting most of your gains in years 2, 3, 4, and 5, or 3, 4, and 5, it's okay because really you can't touch it anyways. And so that's what's great about using your IRA for these passive deals that are a little bit longer term. They have a little bit more upside.
Yeah, I forgot to even mention that. Yeah, for an IRA, right? You're not touching it until retirement. So to you, it doesn't matter whether it cash flows or not. It's just simply what's getting the best return year over year. And so really, you have two options when you're looking at investing with an IRA. Do you want to do it yourself or do you want to just do it passively, right? Right now, you've had it passive this whole time. If you were in a 401k and, it's not doing anything, you're used to it. So then it's just a matter of, well, man, what has my 401k been doing all these years? Like, is it getting 3%, 4%? What is it doing? You imagine if it was getting 18% the whole time. I don't know what the math would be over the span of 50 years, but it would be insane. You're talking millions and millions of dollars of difference, by picking the right deal versus not. But anyways, this deal in Iowa was amazing. I personally went there myself. Maybe the team can grab my YouTube channel and just put the link in. If you just search Ryan Pineda, Iowa, you'll see a recent video where I walked this property, and it's going great. Like I said, we've already owned it for 6 months, and it's already exceeding rent expectations.
So people can invest. People can use their IRA right now and be in this deal. Is that what you're saying?
Yep. So people can get in this deal right now. We bought this deal over here last year next to the University of Iowa. It's already exceeded expectations. It's 99% occupied. There's literally nothing for rent. This one was an interesting deal because it's like my house flipping days. This one was literally 0% occupancy. It was condemned. It was literally, you could not go in it. The city was like, dude, we're going to burn this place to the ground if nobody does anything to it. We're going to bulldoze
it.
Yeah. And so we worked with the city. We literally bought this one right here for like $27,000 a unit. It was crazy. And, the renovation cost more than what we bought it for, but we ended up getting literally all of them fixed up, fully occupied. We just refinanced. And so we got a bunch of the investors' capital back, and we actually put it into this deal. So that's the cool thing with even what's happening now is we bought this deal a year and a half ago, already refinanced, got some of the capital back. And most of those investors said, cool, I'll just double down and I'll put that capital I got already back in this deal. So now the same capital is in 2 deals. So really cool on that front. So yeah, that's just one way that you guys can invest passively. And for this one, you do got to be an accredited investor. So accredited is you've got to be making, you can have $1 million net worth, or you've got to basically have made 250 grand the last 2 years. That's what an accredited investor is. But yeah, I love Iowa. Iowa has treated us really good. Every single deal has crushed it. And, from a perspective of, I guess, risk, there's always risk in any deal. Okay. So I'm not here to tell you there's no risk, but the fact that this one's already purchased and exceeding expectations, the risk profile is way different versus when you buy this one, which had 0% occupancy, and you just are hopefully they get it fixed up, because if they don't, pretty much it was a waste. So yeah, very different.
Well, I feel like that's how most people are right now when they invest in the stock market. It's like they're hoping and praying. You put in your money because your great grandparents have been doing it their whole lives, and your parents are doing it. So we follow the same mold. We put money in this random stocks, or what's your scale of adversity, right? From 1 to 10, you're like, oh, I'm a 6, and then you just plug your money into something you don't even know where it's invested. And so, if you find yourself, you're listening to this, you're like, hey, look, I have an old 401k, or have an IRA that's just sitting there. It's not performing, or it's just doing these ups and downs, and you're celebrating these wins, but really all your wins are getting back your losses. And so if you find yourself there, and you want to take control of your money, this is the absolute best way. And there's only 5% of Americans that do self-directing. And I believe that there's 2 main reasons for this. Is one, most people don't know they can move their IRAs or their old 401ks. And number 2 reason is they shouldn't do it. A lot of Americans should not be self-directing. Why? Because if you're not going to take the time or energy to be on a call at 10 p.m. Eastern time, listening to us and learning and or getting content, it's probably not for you. You should keep doing what you're doing. But for those individuals that want to take a little action, and when I say a little bit of action, this is like a half an hour a month. Literally, if you can put 5 hours a year into your future and earn an extra 2 or 3%, what I liked about Ryan's is, even though 18% is incredible, but what I've seen is, if you can get constant 10 or 12s and not experience the negative 10 or 20s that happen every 4 to 5 years, you're going to be way ahead of others, literally millions of dollars ahead of others. just by getting consistent returns in collateral assets. So yeah.
Yeah. And I can tell you guys too. So a couple of things I see on the chat here. So somebody's like, hey, like, what is an accredited investor? Why do you need to be accredited? So anytime I do deals two different ways, just so everyone knows. One is, I'll market it to the public. If I market it to the public where everyone can see it, it ends up having to be accredited for the most part in the way I do it. And to be an accredited investor, you either have to have $1 million of net worth, right? And, we have a third-party company that verifies this, or you had to have made 250 grand the last 2 years in a row in income. So your tax return has to show you made 250. Or a third way is you and your spouse combined had to have made 300 grand the last 2 years. Those are how you become an accredited investor. So, if I market a deal like this, it's accredited. That being said, for those of you who are not accredited, okay, there's two things I would say. And this is not like me giving financial advice. This is just me telling you about options. One is we do deals with non-accrediteds. Okay, there's another type of syndication, 506B, where we can do deals with non-accredited as long as I don't publicly market it and I have a relationship with that person. So what a lot of our investors do is we have relationships with them prior to a deal. And so I'll get a deal like this and I'll say, hey, I'm not even going to publicly talk about this. I'm going to just fill it with people that I know, my friends, my students, people in my community, and we'll just go do the deal together. I don't ever need to publicly market it, and I can take non-accrediteds. So to that end, if you're non-accredited and you can't get in on this deal, I would still say if you're going to go through this self-directed process, do it, and then let's build a relationship. My team will talk to you. We'll build a relationship so that we can start doing deals together, even if you're non-accredited. So that's one thing. Okay. The second thing is, look, if you're non-accredited and maybe you're not making a lot of money right now, but you do have a retirement account, to me, I'm like, all right, well, time to learn some skills, time to start a business, right? The only way you're going to, create financial freedom is not by, having a little bit of money and then just hoping you hit the lottery, right? And find like the next big investment and all this stuff. No, you're gonna have to learn skills. And like somebody asked this in the chat, and I don't know the answer. Greg, maybe you do. They said, could I invest in my own education with a self-directed IRA? And that's something I never even thought about too, because we've trained thousands of students to create their own business, right? To go flip houses and wholesale and, start creating income, start making that 250 so you can be accredited one day, right? And, you're probably not going to go make 250 at your job for most W-2 people. You're going to have to create your own business if you want to make over 250 each year. And so for me, flipping, wholesaling, those are all great ways to start making over 250 each year. And we can certainly help you do that too. But I don't know if you're able to do your self-directed into education, things like that. Greg, you would know.
Yeah. So there is a way of doing it. If you are starting a new business and you create that business, you can also create a 401k for your business. This is where the self-directed 401k comes into play. If you create a self-directed 401k for your business and fund it, then you can therefore take a loan out against your 401k to pay for education or anything, frankly. And so the reason why this does apply, and I think it's critical, is I find some people get so frustrated with their 401ks or retirement accounts that they don't know this option. So instead they cash it out. They're like, you know what? I'm gonna pay for my education. I'm gonna put it in the business. So they cash out the retirement. They pay a penalty in taxes. So they lose 30, 40%, and then end up with 60% when they didn't have to do that. All you had to do is start an LLC, fund your self-directed IRA, and then once your money gets there, fund your new LLC, and now you can have a 401k. And once you have that 401k self-directed, you can borrow against it and pay off education, pay off a credit card, whatever it may be. And that's the one thing I also share with many people is on this subject. People get excited about it. They're like, I can't wait to self-direct. I'm going to find a deal. When Ryan has that next deal for me, I'm going to build a relationship. That's the wrong process. If anyone knows this, probably Ryan knows this the best. Some of the best opportunities come and go quickly. So if you have if you have an IRA, let's say at Charles Schwab or Fidelity, and you're like, hey, look, I'm going to do this thing once I find a deal. Well, the process, just so you know, and we are the fastest in the industry. It takes us 2 to 3 weeks, typically 2, to get your money from wherever it's at to our company. So what I tell most people, if you're going to start self-directing and looking for opportunities to either wholesale, partner, syndications, a fund, etc., if you know you're going to do it, get your IRA set up, get it funded, which takes 2 weeks, get your money there. And now you have kind of a bank account, right? It's basically sitting at title, at trust with us. And we're there to wait for you to tell us where you want the money to be sent. That way, when the opportunity comes up, you can move within 24 hours, 48 hours. That's a big difference because deals come and go. Like even on this right now, you say you need $1 million. There's a good chance after today's call in the next 48 hours, the $1 million will be gone. And if you didn't have your self-directed IRA set up, you're not going to get it into that deal. And so this isn't like, I'm not saying you got to do it today. I'm saying you probably need to do it this week, because once your money sits, it's okay. That's the other thing I was going to say. My money will sit sometimes literally not invested for a month or two. And I'm okay with that because I'm waiting for the next right deal. Because if you're making 18%, you can handle not making any interest for a month or two, waiting for the next best deal, rather than being in the stock market, which potentially, with all that's going on in today's world, who knows where it'll be next month.
Yeah, no, 100% agree. A lot of people think that, oh, well, my money either, like they go extreme. They're like, oh, my money needs to always be invested in something, right? And so they just like immediately put in like the wrong thing. Yeah. Or they're super scared and they're like, no, I don't want my money doing it. Like keep it in the checking account, right? It's like, no, the best investors just strategically pick the deals they want to be in. And if you don't know what deal you want to be in, then you pick the person you trust to manage it. Like, that's it. Like, you're either good enough to understand like what a deal is, or there's somebody that you trust that you're going to let, manage it for you. So, in the end, right, like Angie's saying, but if it's sitting there, you don't make money. But not making money is better than losing money, just forcing it into something.
And right? Having access to the money. There's a lot of value. Maybe you don't make money for a month, like Ryan and I are both saying right now, but now you have the access to make a big move. Like, think about deals, Ryan. I mean, when you have money and you can make an offer and say, hey, look, I can close in 5 days, but because you can close in 5 days, you ask them for a $25,000 discount rather than closing in 30 or 60 days. I mean,
that's exactly this deal, right? We closed 6 months ago. We had to close to get the great deal. And so we closed, and now we're like, all right, the deal's like going really well. Let's take some funds back off the table that we used to get the deal done and let some other people in on the deal now. And that's it. And like, I'll even tell you guys, I mentioned a bunch of businesses and things. Like today I was on a call with some of our investors, like, another business I started the #1 real estate NFT project. We were #1 in the entire world. And so we invest in real estate together. We invest in businesses together. And I was just showing them a deal for a tech company. This is a SaaS tech company that's changing the music industry. They literally are taking all of the data from radio that nobody else has real access to. It's a monopoly for radio data. It's kind of crazy. And they've built this amazing app it's a SaaS app that pretty much can tell you whether or not you're going to be a #1 song or break the top 40. And it's all the data for a music label and for an artist to know, so they can figure out where they're going to put all their resources and what cities and what stations. It's insane. And this is another one that, we're raising $1 million for. And, it's just like things like this are opportunities. Like, we're going to fill this too, and it's going to be done, and then it's gone. Right. So like, if your cash wasn't there, it is what it is, And so there's this huge thing of like, when your cash is on the sidelines, it's not bad as long as it's not on the sidelines because you're just scared and you're indecisive. It's strategically on the sidelines because there's opportunity coming up that you want it to be available for. If you go throw it in just some crappy deal because you're like, well, it's better than zero, Well, what happens when you get the next opportunity 2 weeks later, a month later, that was way better, but you don't have the cash anymore? And
Oh.
so, um, you know, that's really what it comes down to.
Well, I want to break again for a second. I think Claudia, you might have put it here in the chat. Claudia, she oversees all of our new account open business. If you go to Horizon Trust Company, horizontrust.com/Ryan P, set an appointment. That's the first and foremost. If you think you have some kind of retirement account that might qualify, you're not even sure. I saw a lot of questions about asking about 401ks. Well, we can answer those questions. If you have a current 401k or you currently work for the government, most likely you can't transfer that over yet till you get, you leave that job, or you get fired or you let go, whatever the case is. Most people I talked to in the last 5 years are working somewhere new with a new 401k, but still have this old 401k out there. Those 401ks are all available. And that's what I'm talking about, where there's over 30 million of those in the United States. There's over 100 million or 97 million of these IRAs. So if you're in that boat, set an appointment with us. We'll talk about your account, how it works. And if it makes sense, we'll show you how to actually open up a 401k, self-directed 401k for your business. And then you can put away a lot more money. You can borrow against it, et cetera. I don't want to get too deep into that, but I do want to say the process is very simple. Claudia and our team are really good. We set up literally hundreds of accounts every single month, showing people how to get it transferred over in a very, very simple way. So,
How much, Greg, how many like transactions, like how many billions and things have you guys done?
Look, so our trust company holds over $1 billion now in assets. We're still small in the scheme of things. We've been around 14 years, but we're really boutique. I mean, for us, we process everything within 2 to 3 days. And I think that's the most unique thing about our competitors. If you send in and say, "Hey, look, I want you to transfer,"
It takes forever, dude.
It takes forever. You were one of my competitors. Actually, that company you're with, I don't like to say, you can say them, I don't care. That's actually why I started a trust company, is because when I was building my business, I was like, I got to close in this deal. I need the money in 2 weeks. They blew my timeline every time. So I was like, this is just too hard. And people thought my investment sucked. So like right now, for example, if Ryan's like, "Hey, look, invest in my deal and in my fund," and let's say 10 of you want to open up accounts and do that, and then I drop the ball, meaning it takes me a month to get your money over here at Horizon Trust, you're actually probably going to think, not only do I suck, but Ryan sucks. And so, that's actually, I was in Ryan's shoes. And so that's why I was like, I don't suck. It's not my investment. It's this bad trust company. And so that's why I started a trust company. Now it's what I thrive and I'm passionate about. And so it's a lot.
And let me say this too, guys, for those of you who know me, and have followed me, I don't really like do affiliates. Like, I just don't care. Like I got my own businesses that I'm focused on, and I've got a million different companies like, "Ryan, like affiliate this and do that and help me like with this. And, your people would love it." And I'm like, "Nah, dude, like I'll just do my own thing. I'm good." So when I bring other people to the fold, it's because I know, I'm like, "Hey, this is a need." And I definitely don't want to start a company for it. My first initial thing is, "Hey, should I just start my own version of this?" And I can tell you, like, what they do is, they make a complex thing very simple, and they do it quick, like he said. And Greg will tell you, I've had conversations with him. I'm like, "Hey, here's the deal. Like, if we're going to work together, like, we need the money quick, because a lot of these people are going to want to invest in deals with us. And, we're under the gun and different things, and we got to make the deal happen. And so, we got to have a better system to make sure that it all just goes full cycle the right way." And like for me, I'll tell all of you guys this, whether you came from me or Greg or anything else. At the end of the day, however I can help you win, I'm down with it, right? So if all you do is get your own self-directed and we never do anything together, I'm cool with that. If you invest with me on an apartment deal, dude, I would love that. If you invest with me on a business deal one day, I would love that. If you say, "Hey, dude, I want to actually start my own business, but I do want to go through your coaching," amazing. I'm good with whatever. So for me, the first step is really like what Greg said. There is, a 2-week time frame, which is really fast in this industry. So if you guys book a call with Greg, and we already know that we're going to work together, because my team is going to contact you too and just say, "Hey, what'd you think of the webinar? What stuck with you? what is it you're looking to do? There's no pressure on our end. We're just like, hey, how can, like, what can we do? Right. And you might say, well, I really want to be in that Iowa deal, but I got to wait. We'll say, okay, cool. Like, we'll reserve you a spot. How much do you want to invest with us? All right, it's fine. We know Greg's going to get it done. So we'll mark you for it already, even though we still know you got to go through the process. If you say, hey, this is what we want to do, like, I'm just really interested in Greg, I'll be like, cool, that's awesome. One day, maybe we'll do something together. So either way, you're going to get great service from Greg, who's going to help you do that transfer and who's going to, help you guys figure out which one's best for your situation. And then you're going to have my team help you figure out, hey, what do you want to do once the money's there? How can we help you figure out what's best for you too on that side?
And you nailed it, Ryan. And we feel the same way. And this is why I wanted to have you on, Ryan, because we get literally hundreds of people every month of our thousands that will reach out and be like, can you please just give us, more content, education on what people are doing, how they're having success. And so when we had the opportunity to have you on just to share this, and this is going to go in our library as well, because we've got lots of investors actually that will call in and be like, okay, my deal paid off. What should I do next? Again, since we don't pitch investments, we can put you in our investment library. And when they see your name and your face and what you're up to, they're going to contact you and learn more about you. And so, and there is no pressure, like Ryan said. And for those of you that are in the boat of not having a retirement account, first of all, thanks for sticking through this with us. Second of all, there's money all around you. Don't be discouraged. If you're in that place where banks, you think it's too high of interest rates or it's very difficult to go find money, everybody around you, 30% of people have a retirement account and could be your partner.
Hey, Greg, I don't think either of us mentioned this, but this just occurred to me, is that there's probably people on here who, they don't have a retirement account right now or 401k or anything, but they do need to open one. Can they do that with you to start one and figure out how to start saving on taxes and building it?
100%. In fact, everyone should be doing that. If you don't have a retirement account, which is probably a lot of you, open one up. I mean, that's what Ryan did a few years ago.
Yeah. I didn't have one to transfer. I just was like, I want to save on taxes. I need to open one.
And you can, and look, people ask me, what's the minimum to start with? I would say at minimum is typically $5,000 that you can do something with. But you could even do it like the furniture example we started this webinar on. You could start with $1,000. My son, he's 21 years old. He's had a Roth IRA now for 2.5 years. I didn't do the thing that I think a lot of parents say they can do, and maybe I should have, where they set up all their kids' Roths at age 14 and put them on payroll and all that. You can do that as long as they're on payroll and open up Roths for them, but do it for yourself. If you're just sick of that stock market going up and down, control your own money. Nobody cares more about your money than you do. I don't care more about your money than you do. Take control of it. You'll make so much better, I think, way better returns. Going from 8 to 12 every year, 4%, believe it or not, over a 10 or 20 year period is millions of dollars. Millions. So, so look, I think we're going to wrap up here. Is there anything else? I have one more question for you, Ryan, but before we wrap up, is there something you want to add?
Yeah, I just want to know, first off, I appreciate all you guys for, coming tonight and being a part of this. I think it's going to help you, like I said, no matter what, whether we work together or not. But just so I know, put a 1 in the chat if you do want to work with us in some kind of way, right? Whether that's, coaching, investing, self-directed. All right, cool. So a ton of you guys want to work with us. That's amazing. So this is the first step. Okay. Step 1 is go to the link that Greg's team has been putting in the chat. If you fill out that link, we're going to get your information as well from my team. Okay. And so we're going to contact you and start the process as well. So you're going to simultaneously go through both processes of working on whatever it is you end up doing for your own self-directed, whether you're getting one started, whether you're transferring, you're going to be working with Greg's team on that. Then you're going to be with my team and we're going to figure out whatever's best for you too, whether that's education or investing or whatever the case is. For your situation, I'm not like pushing you either way. Like, we just want to see what's best for you. And so I see a bunch of people are interested in the Iowa deal. I love that. And like the first step is just registering with Greg's team, and we're going to get your data and info from that and hit you up and, talk with you this week. So it's going to be quick, guys. Like, we're not I don't waste time, right? Like tomorrow, my team is going to reach out and say, hey, how can we serve you? So that's how we operate.
Yeah, and our team will talk about fees. We don't hide them. One thing that happens, it comes out of your IRA. So you don't have to use a credit card or a check or anything like that. It comes out of your retirement account. It's less than what you're paying now, so it's not a big deal. So look, I know there's a lot of interested people that want to work with Ryan. You can find Ryan obviously on social media as well as myself. But set the appointment at horizontrust.com/Ryan P. We'll set the appointment. We'll go from there. So to end here, Ryan, I like to ask everybody on all my webinars their sweet, sour, and service for this last week. So what was your sweet for the week, the sour for the week, and what you did to serve somebody else this last week?
Sweet, sour, and serve. That's an interesting one. Well, I'll end with serve, or I'll start with serve, because I was just in Florida. So I literally flew from Florida this morning here to Colorado, which my wife is serving as a bridesmaid in a wedding. So she's serving that. But I was with Tim Tebow the last 3 days out in Florida, just really getting to understand what he's doing with his Tebow Foundation. And, it's amazing just all the cool stuff they're doing. So I think that was kind of like that was like serving and sweet. But, I'll say that's like on the serving side. On the sweet side, the family and I were in Disneyland last week I think within the 7-day stretch, we were in Disneyland. We did the VIP tour, and that was amazing. Just getting to experience that with the family. And the sour part, oh yeah, Doug said I was rooming with Beardy Brandon Turner. He's my guy. Maybe I'll say that was the sour part, having to go have a roomie again, and back to my college and my league days when I was playing baseball. But no, yeah, the sour part was I actually got to play the TPC Sawgrass at the Players Championship, and I shot well. I shot a 77, so that was cool.
Wow.
But I was playing with my friend John Gordon, who's a really big author. If some of you guys know him, and watching him was sour on my eyes because he needs to get some practice in. But guy, but man, we're gonna have to work on his game.
Thanks, Ryan. Thanks for sharing. Look, I appreciate your time and also being so late. Also, those listening from the East Coast and West Coast at this point. So, thanks. Another great session. You'll be able to listen to this afterwards, and we look forward to working with you guys.
Cool. Thanks, guys. I'll see you later. Greg, appreciate you. We'll
Thanks,
be in touch to everybody who registers.